Welcome to this edition of the IFS Zooms In with me, Paul Johnson. And I'm delighted to be joined today by Charlotte Pickles, who is the director of the Reform think tank, and also, rather importantly for today's purposes, is a member of the Social Security Advisory Committee, and a while ago was also an advisor at the Department for Work and Pensions. I'm also joined by my colleague Tom Waters, who leads a lot of our work at the IFS on welfare and benefits and income distribution. And what we're going to be talking about today is that monster of a welfare benefit and welfare reform, universal credit, which is replacing essentially most of the means-tested benefits that we've had for working age people for a long time. It's been in the process of being designed and implemented for a good decade now, possibly more, and it's still got a way to go. And it really is very, very big. And just to give a sense of that, perhaps if I start with you, Tom, just to give a sense of just how big this thing is, how many people will be getting it, and how much is it going to cost?
So when universal credit's fully rolled out, we expect something in the neighbourhood of 1 in 4 working age families to be receiving it at any point in time. And over a longer period of time, that'll be even more because people come on and off the benefit. And it's thought to cost something like £60 billion a year. So that would make up more than half of working age welfare benefits.
So that really is, when we talk about benefits and when we talk about universal credit, I think we just don't often have in our mind that this is something which at any moment in time will be being received by 1 family in 4 of working age in this country. So this isn't just a relatively small thing that only affects the very poor or only affects those who are unemployed. This goes to a lot of low-income, low-earning working families, as well as the unemployed, as well as those needing help with their housing costs, as well as indeed quite a lot of people who need help because of some disability. So this is something that is going to be received by a huge number of people. And it really is a very big reform. And Charlie, perhaps we could come to you just to give us a little bit of the history here. I mean, up until 2010, and for quite a long time, we had a whole host of means-tested benefits, income support and housing benefit and various kinds of unemployment and disability benefits. And Conservative government came or the coalition government came in 2010 with this big, bold strategy to replace all of those, sweep them away, and bring in a single means-tested benefits to replace all of them, and of course the tax credits that had been introduced under the last Labour government. Why go through such a huge overturn, a huge change in the way that the benefit system worked?
So you're right to highlight just how complicated the number of benefits were. So I think there was something like 30 odd different benefits and kind of, an unimaginable number of combinations of benefits that you could receive before 2010. And so one of the objectives of introducing universal credit was to simplify, was to make it easier so that, if you're a claimant, let's face it, a lot of claimants will have an awful lot going on in their lives that they will be anxious or worried about. The last thing they need is to have to apply for multiple benefits from different institutions. What they want to be able to do is apply for one single benefit, know that then that's going to get them, as you just described, Paul, the housing element, if that's what they're going to get, child elements, disability elements, as well as the kind of the standard allowance, that kind of main payment. So simplifying the system was a real ambition for the coalition government in introducing UC. But probably the most important objective was around making work pay. So you've already pointed to one of the big shifts, which was that UC is both an in-work and an out-of-work benefit, something that it seems that, actually people who really should know better often forget. So that's one of the ways that it's trying to be dynamic. So if you move in and out of work, we know a lot of people on low incomes can have fluctuating earnings. They might be in work 1 month, maybe they don't have work another. This is designed to be a dynamic system. But crucially, it's also designed to have a single taper rate, a single withdrawal rate. And what I mean by that is rather than previously where, for example, for every pound of, council tax, you've got a certain number of pence withdrawn if you move into work. And then there's a different number of pence that's withdrawn if you from your job seekers allowance, if that's, for example, the benefit you're on then, and then a different amount from your housing benefit. What universal credit does is it has a single taper rate, which means that you lose 65p in each pound as you earn another pound. So it was designed to make it a lot simpler, a lot clearer that people are better off in work. I'll leave it to others to judge whether that's been entirely successful.
65p is still quite a lot. I mean, the higher rate of tax is 40p. The very top rate of tax is 45p. Tom, perhaps you could sort of take us through why we end up having to have, and I think we do have to have, such very high rates of withdrawal for something like universal credit. I mean, we are effectively taxing those on the lowest incomes, at least in the sense of how much they lose for each additional pound they earn, at higher rates than we are the very highest paid.
Yeah, when you include income tax and national insurance, people on the lowest earnings can often face these kind of effective tax rates of 70, 75%, sometimes even a bit more. I think there's two key factors to keep in mind. So the first one is for people with no incomes at all, no earnings from work or any other source, how much support do we want them to be given by the government? And if that's going to be set at a certain minimum standard, kind of a high enough standard, then if you taper away those benefits very slowly as their earnings increase, that logically implies that people with pretty high earnings are still going to be entitled to a relatively decent, significant amount of benefits. And so that's the kind of trade-off you can't really get away from, is if you give a significant amount to people who have no earnings at all, then you either have to taper those benefits away as their earnings increase, or you accept the benefit system reaching really quite far up the income distribution. So I think that's the reason why we've historically had, and still have with universal credit, these pretty high taper rates.
So you've just got an unavoidable trade-off, haven't you, Charlie? I mean, that's the sort of thing that you were been wrestling with back in the early 2010s in terms of devising universal credit. If you're going to give money to people when they're out of work and you don't want to be giving lots of money to people on high incomes, you have to take it. You have to take it away. So how difficult was it coming up with the design that you ended up with? Because, I mean, clearly there's almost an infinite number of ways of making those trade-offs.
There absolutely are, and benefits are complicated for a reason. So in terms of coming up with the sort of idea of universal credit, that was actually largely done by the Centre for Social Justice, which is a think tank that I was at prior to going into the department when Ian Duncan-Smith got made Secretary of State. So a lot of that heavy lifting work had been done in a think tank, not dissimilar to yours and ours at the moment. But in terms of the decision once we were into government, what we haven't mentioned here is that universal credit was born at a time of incredible fiscal consolidation. So this was designed in government terms in kind of the early 2010s, when we were not only trying to create this system that we hoped would be fairer, simpler, better for claimants and encourage more people into work, but we were trying to do it at a time when we were required to take billions of pounds out of the welfare budget. Now, we could have a whole other conversation about the rights and wrongs of different measures that were taken in terms of the welfare cuts. But one of the deciding factors for thinking about something like a taper rate was, what can we afford, and what is the Treasury going to fund us to be able to do? And so actually, originally, we were hoping the taper rate could have been closer to 55%, and we felt that was, fair. It meant that, yes, you were losing a bit more than you were keeping, so addressing some of those concerns that Tom was highlighting, but actually would give you that little bit extra incentive for moving up the earnings scale, moving into work and then up the earnings scale. But it just wasn't wasn't possible and we couldn't get that through the Treasury. And you have similar decisions about other elements of universal credit. How much can you keep before you have any money withdrawn? The earnings disregard. How do you treat a second earner, for example, given that we know UC is a household benefit rather than an individual benefit? Lots of different trade-offs, as you put it. But ultimately, what it comes down to is, what can you afford to do? We're talking about eye-watering numbers here.
Yeah, I think it's a really good example of the kinds of trade-offs that have to go on inside government the whole time, and it doesn't matter whether it's in social security or in health or education or what have you. Everyone can always think of something more they could do with those extra billions, and the Treasury's always there saying no for overall for good reason. I think it's fair to say, isn't it, that the universal credit as it's being introduced is on average no more or no less generous than the set of benefits currently there that it's replacing. That's broadly fair, isn't it, Tom? And but there will be some winners and some losers.
Yeah, absolutely. On average, the effects are pretty close to zero. But you do get quite significant winners and losers. So it's in a kind of in ways that are kind of predictable if you know a bit about the system. So renters tend to do better under universal credit, because under the old system, as they increase their earnings, they would lose tax credits and they would lose housing benefit. Whereas, as Charlie was explaining a moment ago, under UC, they just kind of have this single take rate. So renters tend to do better under UC. There are some disabled claimants who can sometimes do better under one or the other, and those who have significant assets definitely do better under the old system. So there are ways which you can kind of carve up the population and see quite predictable changes one way or the other. But some of these changes really are quite significant. So you can have changes in excess of £1,000 a year and not too infrequent, either positive or negative.
So there are winners and losers, which often make things unpopular, but actually universal credit, one gets the sense, has had a bit of a bad press, not so much because in the long run there are some winners and losers, but more for all sorts of other reasons, partly to do with the administration, partly to do with what's known as the initial waiting period before you actually get the benefit. But Charlie, perhaps you go. As you've described, this thing was introduced with all the best intentions in the world, and as Tom has just told us, it's not actually on average any less generous than what it's replacing. But it's not been a smooth path, and it's not been I suspect perhaps this is easing off a bit at the moment, but certainly over the last several years, it's had a pretty bad press. What's your sense of why that's been the case?
I think it's in part for the reason that I said earlier, which is that it was introduced at a time when literally billions of pounds were being taken out of the welfare system. So there's a sort of a kind of inbuilt association now with universal credit and welfare cuts, which I think is really unfortunate. And again, I would suggest that some people who should know better, including parliamentarians, have failed to split those two issues and recognise that universal credit has, and as we sit here today, a year on from the pandemic, I think we'd all have to recognise that thank goodness we had universal credit in place, because actually the robustness of the system in terms of bringing masses of new claimants in withstood the challenge it was faced, and I don't think we would have seen that with legacy benefits. But you're absolutely right. When people talk about, getting rid of universal credit, as I think the Labour opposition are still saying they would do, I think what they really mean is they would want to change certain elements of universal credit, because I'm not sure why you would want to go back to a system that was complicated with, quite frankly, so many combinations that you or I probably couldn't quite understand exactly what we might end up with, never mind someone who's struggling with debt or having lost their job or perhaps lower education levels or qualifications. So it's really about how you improve it. And the 5-week wait, which is one of the things that, Paul, you just mentioned, is definitely a challenge. And what we've seen is some fairly good data showing that people who claim universal credit and then have to wait 5 weeks until they actually get a payment are forced into debt during that period. And, there's been kind of some dispute as to whether the rise in food bank usage is linked directly to that. But I think what we can say is that there are certainly some correlations going on. And so reducing that wait time would certainly alleviate one of the biggest problems with universal credit. But there are also things like we've talked about the taper rate, if you could make it a bit more generous. There are issues around second earners. There are all sorts of specific policy challenges that if you took them each in turn and decided whether you wanted to do something about it and pick those that are, the kind of, I suppose, most damaging, that actually you could quite quickly get to a point where I think a lot of the criticism levelled against UC would no longer be valid.
Because it's not, in a sense, the structure. People could not argue
Exactly.
about the 65% taper rate, but that's actually lower for a lot of people than the previous one. And it's not so much that, I don't think anyone's really against the idea of bringing these benefits together. It has been a lot about some of these what feel like administrative issues, but actually a big impacts on recipients. And one of the things that I think was part of the thinking, and I'd be interested in your view on whether this really was part of where thinking was at the time that it was being introduced, was that moving to particularly less frequent payments, monthly payments, was part of getting people on benefits sort of behaving more like or getting used to the getting paid in the same way that they would be if they were in work. Do you think that was that's caused a degree of controversy as well, as has paying a housing benefit to the recipients rather than to the landlords? These all sort of sound like good ideas, from Whitehall, but might feel like less good ideas to people who are actually experiencing, as you say, the debt and the poverty and the toughness, making ends meet week by week. Were those? How did that thinking go, and how much of an issue do you think that's been?
I think you're spot on. So absolutely, there was very much, I would say, quite a considerable amount of time put into thinking about how you can make the benefit system more reflective of, as you said, Paul, kind of how people who aren't on benefits live their life. And so that was where the idea came from, moving from 2 weekly, fortnightly payments to monthly payments, and also to paying rent directly to the claimant as opposed to directly to the landlord. Because, you and I, if we're renting, we don't get that. We have to see that money. We have to budget. We have to set it aside. We have to pay our rent. So there was very much, I guess, a focus on could we mimic the behaviours better in the benefit system of those that, people who once they hopefully move up into work and out and even off UC, the kind of behaviours that they would need at that point. Now, the reason you're spot on is because it's a very valid argument, and you're right. Sitting in Caxton House, which is where the Department for Work and Pension is, or indeed anywhere in Whitehall, it seems sensible, right? Because we're on salaries, so we get paid monthly, and we all are in relatively well-paid jobs. We've kind of got basic budgeting skills at minimum. That's not necessarily the lives of people that UC is serving. And actually, an awful lot of people in work aren't on kind of salaries. They're on hourly rates, and they're not paid monthly. They are paid at different intervals. And so I think there was a little bit of, perhaps naivety is the best word. I think again, good intentions in trying to do something which we hoped would help, set claimants up for the future, but actually not really having thought through whether our assumptions were going to be helpful or detrimental in the long run. And I think this is one of the areas where we still see a lot of pushback. It's become sort of one of the sort of red flags or the kind of totem poles that says this is what UC is supposed to do. In my mind, this is absolutely one of the areas that a kind of acknowledgement that the thinking perhaps wasn't, at the time we thought it would work. It hasn't. Classically in government in Whitehall, it's very difficult to say we got something wrong, but I think we did get this wrong.
Now, it's kind of interesting. Just on a sort of broader point there, there'll be some people listening to this thinking that's, pretty shocking in a way, because obviously lots of people were predicting that this would be an issue. To what extent, as part of the policy design, did you engage with the sort of potential recipients and indeed the people in your own department at the sharp end of working with recipients? And to what extent, because it feels like this, the way you describe it, this was kind of designed almost, some real distance from the people who are actually going to be affected.
So I definitely don't think that's the case. The DWP does engagement all the time with benefit claimants and with stakeholders that represent those claimants, so different charities and bodies. Likewise, certainly when we had been developing, I think what we called dynamic benefits. Gosh, this is reaching back, as we said, over a decade. When we were in the Centre for Social Justice. We did hours and hours and hours of work engaging with claimants, small grassroots charities working with those claimants, big national charities working with those claimants. I don't think it was a lack of engagement. I think it was a naivety. I think it was it was kind of one of those thoughts of, we think this is one of the challenges that people on benefits face, which is budgeting, which is, kind of making that shift from what is the benefit system is a pretty paternalistic kind of passive body, if that's the way I can put it. And so the idea was trying to put more ownership and more agency in the hands of claimants. I think it was just that we underestimated, we both underestimated the impact that could have, I think, but also hadn't quite recognised that actually you could well be, in full-time work and still not being in receipt of a monthly payment or whatever it might be. So I don't think it was a lack of engagement. I think it was just a naivety in designing the system. And now I think, it's a big problem that people won't backtrack on it.
Well, that is, as you say, often a problem within government, that admitting mistakes and admitting you're wrong is often very difficult. But Tom, Charlie was just saying then that we got through to 2020. The universal credit had been significantly, but not fully rolled out, and then we had the pandemic. But before I ask you a bit about what we know about the experience during the pandemic, just how far are we through that process? How many people have we still got to bring on to universal credit, and what do we know about why it's taken so long?
So there's still a good number of people getting the old style of benefits. There's something like 1.5 million getting working tax credit, and there's a couple of million who are getting the legacy out of work benefits. The pandemic has certainly sped up the process, because the way that UC has been rolled out so far is when your circumstances change significantly and you're on the old benefits, the legacy benefits, you then get rolled across to UC. And the pandemic, of course, caused a change in circumstances for a lot of people. Why has it taken so long? I think the key thing has been this, is that the government have relied on people's circumstances changing, things like losing your job or entering work or having a child, in order to roll the scheme out. If your circumstances haven't changed, you will have just stayed on legacy benefits, and they haven't yet got around to kind of manually, if you like, pushing those people across to universal credit. And there have been a lot of dates when they were going to start doing that, and then things get pushed back. And I think they have been doing some pilots before the pandemic. We're doing some pilots on that, but for whatever kind of administrative reason, that has proven to be a process that's taken quite a long time. And I think UC was meant to be fully rolled out by something like 2018 or 2017, perhaps, when it was initially conceived of. And by the time we got to 2018, I think it was only a third rolled out or something. So it's a fair bit behind schedule, I think it's fair to say, because of these sort of administrative reasons.
A fair bit behind schedule is quite generous, I think. I mean, it's, many years behind the original schedule would be.
May end up as much as a decade behind schedule.
And I think that's probably one of the reasons why it's got a bit of a bad press, is because it has taken such a long time relative to what I think were overly optimistic initial assumptions to get the whole thing rolled out, and it's sort of at one point it was looking like yet another disastrous government IT project. I think it's been pulled back from that, and it is something we will get in the end. Tom, what do we know about how many people were? We've got this kind of quite new system in place, and then we have the pandemic hit, and I think we had staggering numbers of people applying for universal credit in the first couple of months of last year's lockdown, didn't we?
Yeah, in the fortnight after lockdown was announced, almost 1 million people applied, and there was one day when 100,000 applications were made. So that's about 10 times the normal rate. I mean, that really is pretty significant. And this does connect to something that Charlie said earlier, is actually UC and the department did pretty well there in keeping things ticking over that period. 93% apparently of claims were paid on time from those applications, which I think is pretty good going when you've seen such a massive increase in applications. And there's now something like 5 million, or just under 5 million, I think, families that are on universal credit.
That's quite something. 1 million people in a single day applying for
over a fortnight. There's 100,000 in a day.
100,000 a day, so 1 million over a fortnight. That's still quite a substantial, to put it mildly, quite a substantial number. And of course, to some extent, the thing that has kept universal credit in the headlines over the last year has been the decision a year ago to increase the main rate by £20 a week. Again, just give us a sense, Tom, of how £20 a week, if I'm honest, being on a decent salary doesn't sound like very much to me, but for people on universal credit, it really is quite a substantial amount of money, isn't it?
Yeah. So the key thing about the impact of £20 a week is what kind of claimant are you, in the sense of if you are a renter and you've got lots of kids, your basic entitlement might be quite high already, and £20 a week actually might be a less proportionally significant increase. Whereas if you, for example, are single without children and you own your own home, it's something like it makes it more than 20%, I think it's 21% or something of your entitlement. So for those people who are entitled to less, it really is pretty significant. And this really interacts actually with the kinds of people that have been pushed onto universal credit because of the pandemic. So more than half of people who are on UC now are single without children, which is completely unlike the standard benefit composition, the composition of benefit claimants that we would have seen prior to the pandemic. And this is because a lot of people have lost their job at being younger because of the pandemic. So for a lot of those people who don't have kids, their basic entitlement is not particularly high, and the £20 a week can be really quite a significant proportion, as I say, it can be more than 20% of their entitlement.
And when you say not particularly high, we're talking, what, £70 a week or something like that?
Yeah, the basic entitlement I think now is about £75 a week without the £20 uplift for a single person, no children, who's not renting. Yeah, they're on something like £75 a week. And
that's not a lot to live on, I think it would be fair to say. So you can see why £20 a week in those circumstances really is, a lot of money. And Charlie, of course, we're there back to those trade-offs, aren't we? I mean, we've got the Treasury accepted this or agreed this £20 a week increase on an explicitly temporary basis for a year. And then in the budget just last week, as we're recording this, the Chancellor extended it for a further 6 months under a huge amount of pressure to keep it going. But how is the politics of that going to work? I mean, he's obviously put off the evil day in which a final decision has to be made. I mean, he will say he's made the decision and it will be cut by £20 a week in October. But how do you see the politics of that playing out?
Not very well, would be my very short answer. My slightly longer answer would be I suppose if you're sitting in the Treasury right now, you are worried about the public finances, and that's your trade-offs point. So I think it's somewhere in the region of 6 billion it would cost to make it permanent annually. So, it's not insignificant if you think about the gap that we need to close in terms of what we spend and what we bring in terms of the public finances. So you're thinking about that. You're also probably thinking, I reckon in 6 months' time, economy is going to be kind of motoring. A lot of those people who went onto universal credit will have come off or at least had their hours increased and be less dependent on universal credit. So as Tom was saying, it's quite a different cohort that's flown onto universal credit than was existing there. So maybe you're thinking perhaps then it's just not as much of an issue because a lot of those people that came onto it would have gone back off. I think that would be very naive. I think there is not necessarily that won't have happened, but that will dampen the outcry when we get to the withdrawal of the uplift. And I think there's a problem here, and I mentioned right at the start that one of the big differences of UC is it's both in and out of work, and I thought it was quite interesting some of the discussions pre-budget, particularly amongst some parliamentarians about. And actually some commentators about, why should we be giving more money to people who are, out of work, et cetera, we need to get them into work, and really failing to recognize that about 40% of people currently on UC are in work. So actually, if you think about the red wall seats, you think about those parts of the country that the Conservatives won back in December 2019, the Prime Minister told us he had their votes had been lent to him. There's going to be a lot of people in those areas that will be benefiting from the £20. And so politically, I think it wouldn't be particularly wise to remove it. And of course, you just got to remember that we've got very, very low levels of our benefits. We are not a generous benefit country. That standard allowance, if you stack it up against, other countries, looks pretty meagre, partly because, of course, going back to those welfare cuts, we mistakenly, and the DWP lobbied very hard against this, but we mistakenly applied a multi-year benefit freeze. So, people on benefits were getting poorer year on year. So this £20 uplift, I think, is going to have to be extended further, not just because the political fallout, I think, will be massive, but also because the benefits are too low at the moment. They're just too low.
Yeah, and it's, it is extraordinary looking at the benefit rates for particularly childless people out of work. They've not risen in literally half a century. They are the same level, before that £20 uplift in real terms as they were 50 years ago, at a time when average living standards and earnings have gone up by 2 or 3 times. So they've fallen further and further and further behind. This isn't really a podcast about the politics, but it is. But I'm fascinated by the politics of this. You've just set out what I think, it seems to me fairly straightforward common sense that the politics of ending this in October are going to be hideous, and there's a very high probability that, government's going to have to back down. Why can't they see that?
Well, you could ask that question, Paul, on several of the things they had to back down on repeatedly, right? What a brilliant question. I think it comes back to, as I say, a genuine worry in the Treasury about the public finances. I think the Chancellor himself is very concerned about what might happen with interest rates and therefore servicing the debt. And to be honest, I think that, the benefit system has never really been a massive priority for kind of the backbenchers. So, if you think about previously who typically Conservative voters were, they were much less likely to be people who were dependent on benefits. I think there's a sort of a mind shift that's happening now within the party, recognising that actually the Conservative base looks very different now to what it looked like, a decade ago. And so I think perhaps there's a bit of catch up to do. And I think on the U-turn, I just think we've seen so many of them, haven't we? And maybe it's wishful thinking that the context will be so very different come 6 months' time that the conversation will be different. But I can't see that happening.
Yeah, and it's just a reminder again: a quarter of the working age population will be on this, or will eventually be on universal credit. So this is not a minority sport. I mean, this affects a large, really large number of people. I mean, I can completely understand why the Treasury are where they are. I mean, they introduce something as temporary, and then they just worry about everything they do that's temporary becoming permanent in exactly the way that you describe.
I'm pretty sure they must have someone in there at the time, though, who sort of went, "Really? Is this going to be temporary?" I'm pretty sure that flag would have been flown.
No, absolutely. And I think they're they only need Marcus Rashford to start campaigning on it, and it's going to be very hard for them. We're coming sadly to the end of this, so I suppose we ought to look forward a bit in terms of what next. I mean, Tom, what's your view about, we've had this, as you said, this kind of not just huge spike in numbers applying for universal credit, but also a very different population on universal credit over the last year because of the pandemic. I mean, do you think that's going to change anything very much? And I mean, are there changes you would like to see in the way that it's designed?
So I think, the optimistic case of the economy is people get back into work really quickly, and we kind of return something like normality quite quickly. And actually, the people who are on UC now are on lots of dimensions are more advantaged than the kind of typical case. They're more likely to have a degree and things like that, have worked in a high skilled occupation before, that sort of thing. Perhaps they are able to get back into work quite quickly, and actually the benefit caseload ends up looking kind of quite like what we're used to, and perhaps that's the kind of thing that you could imagine actually resulting in getting rid of or undermining kind of some of the calls for longer term structural change to the system. I think in the world where the benefit caseload remains higher, and particularly given that a lot of people now have interacted with the benefit system who never have before, it does underline the point we were talking about a moment ago, that at least for out of work benefits, certainly for those without children, the basic entitlements are pretty low compared to other developed countries and compared to the past. And you could imagine that results in increasing calls for more permanent increases, perhaps making the £20 uplift permanent, but you could imagine other increases as well. There are bigger questions we definitely don't have time to get into now, but bigger questions about the fundamental design of the UK benefit system. And so what we have in the UK is very much means-tested benefits. Benefits are targeted towards those who have low incomes. If you look across many other developed countries, particularly look at continental Europe, they have much more in the way of contributory benefits. If you've been working for a while and you've paid into the system, then you lose your job, then at least for a period, maybe 6 months or something, you get a higher rate of benefits. And it is the fact that we don't have almost any contributory element at all is exactly why the government felt the need to develop the furlough scheme on the fly. Because we don't have a furlough scheme normally. If you lose your job, you're not going to get the government paying 80% of your wages. And whether one key question, I think, for the government is whether they want to take from the pandemic, from the furlough scheme, where they want to take the lesson, but actually something more like a contributory system is in the long run justified. That would be another very big change. Perhaps they feel like they've had enough of big changes to the benefit system. But I think that's the kind of really big structural question that the pandemic has raised.
Well, that really is a big structural question. I think we'll need another one of these podcasts to get into that. But Charlie, if you were sitting in DWP again now, advising the minister on universal credit, what would you be suggesting that Therese Coffey's priorities ought to be?
Well, after locking in the £20 and making sure that it's not withdrawn in 6 months' time, I'm along similar lines to Tom. I think this has shown us just how threadbare the system is for anyone who earns even kind of just above the sort of average earnings. I mean, even average earnings, to be honest. You fall on to hard times. You lose your job. You think you've been paying into a system for years and years and years via your national insurance, your tax, and someone turns around to you and says, "Oh yes, no, we'll give you 80 quid, 100 quid a week for your standard allowance." And I think your jaw hits the table as you think about how on earth you're going to meet your bills. And yes, of course, there are other elements. For example, you might get contributions towards housing costs, but the sort of shift in very, very rapidly you're going to have to make in your outgoings to kind of get them in line with what benefits will provide you is huge. And that's why we will see people, and we are seeing a lot of the people on UC that have flowed onto it during this period being pushed into debt and being worried about meeting kind of essential bills. So I would be looking at, okay, we have UC, we've got the fundamentals. I mean, let's set aside the continued rollout, which will, I'm sure, still be at the top of the Secretary of State's in tray. I would be starting to ask the question of what might bringing back some element of the contributory principle look like. Could you, for example, think about having a sort of temporary higher level? So, Tom talked about the kind of model on the continent or in a lot of countries on the continent. Well, yes, they pay a proportion, like our furlough, a percentage replacement rate for the earnings that have been lost. But that's normally for a time-limited period. So actually, could we look at saying, if you've paid into the system, whatever the level of contributions are that we would set it at, then for the first 6 months, for example, of your unemployment, we will give you a higher rate because we believe that you need that period of time to adjust your outgoings. We also think it might be beneficial to give you a bit longer to find the right job rather than ending up taking a job that means you're underemployed, which can often happen when you've got very, very low levels of benefits. So I'm certainly not sitting here saying that is what Therese Coffey will be thinking about, or indeed anyone in government will be thinking about. But I think, if you were to ask me if I were there, what would I like them to be thinking about? What would I be pushing for? Then I think rethinking this would be quite important. And as a final comment, it was interesting. I think it was the Shadow Work and Pension Secretary gave an interview. It was before the pandemic, so I would guess back end of 2019, where he talked about precisely this point, the contributory principle. People think they've paid in. If we're going to talk about a something for something system, then we actually have to hold up our side of the bargain, the state side of the bargain. So I think there's some interesting dynamics here that could lead to a really worthwhile conversation. If we don't just bury our head in the sand and go, it's fine, it's all going to go back to normal, UC was doing all right, yeah, we can tweak it, at the edges. I think there is an opportunity here, and I'd like to see some proper reformist thinking on it.
Well, how interesting. I mean, I think that's one measure of the effect of the last year on the thinking, actually, of people like you, Charlie, and you, Tom, in terms of my guess is that I've asked that question a year ago. I might be wrong. I would have got a slightly different answer. So I think that's a really fascinating thing, and we'll see whether it actually has an impact on government thinking and policy. It's been an absolutely fantastic conversation with the two of you. I mean, the thought I just want to repeat this point to everyone listening. Just don't forget that when people talk about universal credit, this is something which directly at any particular moment in time affects one family in 4 among people of working age in this country, and a lot more of that over a period of time, because of course most people don't stay on it for a very long time. So people move on and off. This is not just a benefit affecting a small number of the unemployed. It is one that affects, if not quite the majority, certainly a large minority of people in this country, including a large number of people on relatively low pay, certainly by no means just the unemployed. So all of what you've heard today, all of this information about the structure and level of universal credit and the way that it's paid really matters enormously, and not least, as Tom pointed out towards the beginning, that it cost the Treasury north of 60 billion pounds a year, which is, for example, more than the entire defence budget. So this is big money as well. So I hope you found this podcast as fascinating as I did. So please tune in next time. For all of our latest work, please visit www.ifs.org.uk. And to further support our work, do consider becoming a supporter of the IFS for just £5 a month. You can find a link for further information in the episode description. Thank you for listening, and stay well.